Hello. In this session, we're going to consider the income statement and the role that it plays in reviewing the finances of a supplier. Generally speaking, there are three financial statements that procurement professionals could look at. Analysing these will help you to understand how a supplier is performing on a financial level and whether there are potential warning signs that could affect its contractual delivery. Of the three financial statements that make up a supplier's set of accounts, I personally consider the income statement to be the most fundamental. While analysing this will only provide a partial insight to the financial position, it should always be the starting point for any procurement professional. The income statement provides you with a summary of an organisation's financial performance in any given trading period. Typically, we think of this as the financial year, but technically it doesn't have to be. Unfortunately, there are many different forms of accounting convention around the world. And so when comparing the finances of different suppliers, you might find it difficult to establish consistency in the presentation of these accounts and the terminology that's being used. But that said, most income statements are made up of four fundamental elements. First, they tell us the total amount of revenue income that an organisation has received during the trading period. This is sometimes referred to as the top line because it is always shown as the first entry at the top of the income statement. Sometimes instead of the word income, alternative words such as sales, revenue or turnover are used. In general terms, from a procurement perspective, these broadly mean the same thing. They tell us how much money the organisation has received in total. Secondly, income statements provide us with a summary of all the expenditure incurred during the trading period. This is usually split between direct and indirect expenditure so that an analyst can see what proportion of spend is consumed directly producing and selling the goods and services of that organisation, as well as what proportion of spend is attributed to the company's corporate overheads. This split between direct and indirect is helpful. It gives you an insight into the cost base of the organisation and their products. The third element within an income statement refers to the adjustments made by accountants. These don't always refer to the physical flow of money in and out of a company, but could refer to changes in value, for example, the depreciation of assets. And finally, income statements provide you with a bottom line summary of the overall company's financial performance in terms of a profit or a loss. This bottom line figure is so fundamentally important that often the income statement is referred to simply as the profit and loss account, or P&L for short. There are several different types of profit, and to be honest, that's a separate discussion in its own right, which we'll pick up in a separate session. Needless to say, if a company's total income has exceeded its total expenditure during the trading period, there will be a surplus of funds left over. And in the private sector, we refer to this as profit, while in the public or the third sectors, the term is simply kept as surplus. But conversely, if a company's total income ends up being less than the total expenditure, the company will have a deficit of funds, which we refer to as a loss in the private sector. Now, in many ways, these differences in terms end up confusing and obscuring the real issue. What you want to see within a supplier's income statement is evidence in the bottom line of whether their spend is outstripping their income, such as they're losing money, or whether they have their costs under control and they're generating surplus funds. And so that's the basic function of an income statement. It provides a useful insight into a company's finances and the general underlying financial performance in any given trading period. More importantly, from a procurement perspective, we get an initial understanding of how a supplier's operations are either generating money or draining it from money over time. Thanks for watching, and I hope you found this summary of the income statement to be useful.